All right. Hello, everyone. I'll give it a few seconds here while we get started and we wait for a few people to join. So make sure if you're joining now, make sure you leave your questions in the comments because I'll be getting to those as we get through. And obviously, if you're joining on Facebook, make sure you hit that like button. Hit that like button on Facebook. And if you're not on Facebook, head over to YouTube, hit the subscribe button. All right. Sorry, everyone. Hi, I'm Ethan Rushock, and welcome to another episode of Tax Talk with Ethan Rushock. So this is my weekly live chat I do here on Facebook and on YouTube. So pretty much for those that are new here, what I'll do is go through some topics. So tonight we're going to be talking about budget. So the budget that was released last night by the federal government. So we're talking all things budget 2021. And then I'll get into some questions that have been asked through the week. And then I'll get into some questions that have been asked in the comments. So leave your comments. They don't have to be related to the budget. They can be tax related, crypto related, accounting related, business related, anything like that. But obviously the main topics I'm going to be talking about is going to be budget night. So yeah, for those that don't know, budget night happened last night. So that's where the Australian federal government hands out the budget for the year. So normally it's quite an interesting time when it comes to tax and business because there's obviously normally schemes in there that are going to affect business owners and the taxpayer in general. So it's really interesting to digest that as an accountant, see what's going to happen because this is going to dictate what I'm going to be talking to people over the next, especially the next couple months, but over the next 12 months because a lot of these things are long-term things and especially for business clients, normally some big things in there that are going to potentially change what their plans are. So it's really exciting as an accountant because it means you've got to be on the ball and I have to do a lot of time studying any changes, which in some years there's a lot. This year's not as many, to make sure I'm around it because I've got to apply these tax rules correctly. So it's really important for me to understand it. But that's why I wanted to jump on here this week and give a bit of a quick rundown on, look, the major things that will affect people and also some of the advertising that you'll see around it because everyone loves a good headline. I spoke about it last week when I was talking about budget night coming up. A lot of these news companies love to promote a headline. Obviously, if we get into politics, the government obviously want to make budget sound better than what it is. They always push it and go, oh, you're going to save this, you're going to save this, look at where we're spending money. But I want to approach it from what it actually is and explain to you what it actually means so that you get it from a third party here, not just directly from the government. So the main one that's probably going to affect everyone is, and you'll see this one, it's going to be pushed around a lot because it's an extension of what was announced last year, is the $1,080 tax offset. So this is the low and median income tax offset. So what I'll do, I'll give you a bit of a spiel about what it's all about and then explain to you why some of what you're going to read about might not be quite accurate. So pretty much what the government have announced is they're going to extend the low and middle income tax offset, the low and middle income tax offset, so the LMITO, and it's going to continue to apply for the 21-22 income year. So initially when this was brought in, it was only going to apply for the 2021 year, but they're going to extend it for another 12 months. So you're going to see a lot in the news about, oh, the $1,080 tax cut. You'll get an extra $1,080 back. So while in essence this is going to be correct, it's not really telling the full story because the full story behind it is that that was already in place for the 2021 year. So people would have actually seen their tax refunds reduced for the next financial year. So there's different brackets of how this works. So you've got from 0 to 37,000, you'll get $255. From 37 to 48, you get $250, $5 plus your taxable income. Take 37,000 times 7.5%. Then from 48 to 90,000, you're going to get $1,080. So that's where that comes in. And then that phases out at 3% of your taxable income as such over $90,000. And then $126,000, it's completely phased out. So this is the same as how it applied in the current financial year. It's just being extended into next financial year. So when you see it promoted in the news headlines, just be aware that, look, this isn't going to mean that you're going to get your tax return back this year and receive an extra $1,000 in your bank account. That's why a lot of people got confused last year, and we're expecting to see this extra $1,000 rock up after they'd received their refund already. So it didn't work like that, and you're not just going to suddenly get an extra $1,000 back come this tax time. So understand that these things that are announced further in advance, they're factored into the tax table. So it means that through the year, next year, you will pay this $1,000 less in tax through the year, but doesn't mean you're necessarily going to get that back extra at the end of the year. So having that understanding of tax things that are announced well in advance are going to be factored into your ongoing withholding. So that's a really important thing to understand. So I'm glad that's helped some people here, because I know that that's going to be a common question that's going to come up. So yeah, that's really common. As Sharon says here, everyone are thinking they're going to get extra. So it's going to be a really common thing that's going to come up, and because of the way it's promoted. So that's why I wanted to cover that one off, because yeah, that's probably going to be the most common. There was a question I was asked, which I'll get onto it. So we'll come back around to that for people that might join a bit later, but that's something I want to talk about. So then one of the other things that I think is a really cool one is the self-education expenses being, so what there was a limit of $250, that first $250 that you expended on self-education expenses, now it still has to be work-related, but that wasn't deductible. So they've actually made some changes. Now, as with anything on budget night, these things still normally have to pass some form of legislation. So what gets announced isn't law as of right now, but quite often they'll be either backdated to then or they'll state a date. So as I said, so there was the first $250 that you spent on self-education wasn't deductible, and then anything over that was deductible. So you still had to meet all the rules of it being a work-related education, so it had to further your career that you're currently in and potentially increase your knowledge for your current job, etc. So I won't go too much into that. But what they've done is scrap that. So that limit is removed now, and you'll be able to claim all your work-related self-education expenses. So I think this is really important, because a lot of the times you may have small expenses when it comes to self-education. You may do a small course, you're paying for fees, and you may have small actual deductions that were legitimate, but you're losing out on that first $250. So that's scrapped, and I think that'll make it easier for people to work out the benefits of potentially spending money on their self-education, because they're going to know that, okay, I'm going to get to claim that no matter what. Doesn't matter if it was only $200, it's going to be claimable. So I think that's a really important one, because, yeah, it's going to benefit a lot of people, I think. And the other thing, I know they have spoke about other things with self-education, potentially broadening what's allowed to be claimed. So especially when it relates to not relating to your current job, which you currently can't claim. So they've talked about that. I can't see anything at the moment saying they're going to bring that in, but I think that will be something that there's a lot of people lobbying for that. So it wouldn't surprise me if that does happen. And then so another one that's come up is actually related to super. So we now move on from tax and we're going into super, and is talking about the $450 limit. So for those that aren't aware, is that currently when you're working, if you have to earn a minimum of $450 a month before super is required. So that's the super guarantee contributions. So what this will aimed at doing is, and they've actually aimed this and they've promoted it as something to help women, but it will help all people, is that it's aimed at trying to help those low income earners increase their super. So what they're saying is that for the people that aren't earning this, approximately why they're saying about women is because they're saying 63% of these people are women that are earning under that and therefore aren't getting any super paid. And quite often what happens is some people may do this for a long time. They're going to earn minimal amounts. They might be doing a few hours a week, might earn $100 a week, therefore aren't going over that $450 a month most month, and therefore are never getting any money paid into their super, even though in the end of the year, they may still earn, like it might be $4 or $5 grand kind of thing. So it might be only $300-400 of super for the year, but they're not getting paid it because of that limit. So I think it's really cool that they have scrapped that, because it will allow more people to come into and starting with super. Now, I'm not 100% sure. I can't see anything about there's a few other rules regarding super as far as under 18s or anything like that. At this stage, I haven't seen anything to say that that's going to change, but that $450 limit has been removed. And then the other thing that's going to relate to a lot of people is the super increase is happening. So from 1st of July, it goes up by 0.5%. So you'll now be getting 10% super instead of 9.5%. So this has been talked about for a while, about super increasing. So there's a whole scheme there where it's meant to go up to 12% by 1st of July 2025. Now, I know some people in the business world don't really like this purely because they say that when super goes up, like your minimum contribution percentage there that has to be made, is that quite often that can come at the expense of wage increases because these businesses have to find this extra money. So there has been talk about whether this is a good idea or not, but that will be happening as of 1st of July. So you'll notice that your super contributions should be going up to 10% from your employer. So keep an eye on that because there's plenty of people that, unfortunately, super is one of those areas that people seem to think they can get away with not paying because people don't always check their super funds. So make sure you're checking your super fund regularly to make sure your contributions that are yours that you've earned are going into your fund. So keep an eye out and make sure that's now gone up to the 10%. So the other thing I'll talk about is more for business clients. So the temporary full expense measures have been extended. So this was brought in last year to help with all the COVID stuff. So pretty much it allows businesses to deduct the full cost of eligible depreciating assets as well as the full amount of second element of cost. And it pretty much allows for temporary full expensing for small businesses, which is an annual turnover of under 10 million or has an aggregated turnover under 5 million. So it's pretty much going to cover all small businesses. And it allows them to fully expense depreciating assets. So it's a really good way to bring forward an expense. And this is something obviously I'll talk to a lot of my business clients about when it comes to tax planning. So it's a good way to reduce tax now. Now, obviously, the downside is you're bringing forward an expense, which therefore means it can't be claimed later. So it is something for people to wear that I think some people get caught up in of, oh, wow, I claim that now, and they're not understanding that that means that they can't claim it later. But yeah, that's going to be a measure that's brought in and it's being extended for another 12 months. So that'll now run through until, sorry, it's being extended until, yeah, so it goes from now until the 30th of June, 2023. So we've got still another 2 years up our sleeve of that, whereas it was meant to finish next year on the 30th of June. It's been extended for another 12 months. So, and that's mainly the reasons for that is they're going, okay, look, COVID hasn't moved as quick as what everyone was kind of hoping. It's still going to be around for a while. Some businesses are still struggling. What can we do to try and get the economy going again? So that's what a lot of these things are about. So now I'm going to run through a range of other bits and pieces here. So I won't go into as much detail, but if there is anything I mentioned that you want to know more about, make sure you do leave a comment because I'll quickly brush over some of these. So personal tax rates are unchanged for 21, 22, and they've still got the stages where they're going to change all of those. So stage 3 of these changes starts from 24 to 25, and that's all unchanged at the moment. So there's a primary 183-day test for individual tax residency that's had some changes. There's some childcare subsidies that are going to change from 1st of July 2022. So I'll just bring up that and talk about that because I figured childcare is something that is definitely, so I'll read this one out to you. So commencing from the 1st of July 2022, the government will increase the childcare subsidies available to families with more than one child aged 5 and under in childcare by adding an additional 30 percentage point subsidy for every second and third child. And they're going to remove the $10,560 cap on childcare subsidy. So it's going to benefit around 18,000 families, they believe. So the reason this is, they're saying is a single parent on $65,000 with 2 children in 5 days of long day care who chooses to work an extra day will be $71 a week better off under that system. So obviously every situation is going to be different with things like this, but yeah, I think anything that's aimed at getting parents back into work is always good. And the good thing about that is that it's subsidies so you can still keep your kids in childcare and go back to work extra days. So that's what those ones are about. And then there's a few more things related to businesses as far as like loss carrybacks, things have been extended by a year. There's some stuff around employee share schemes. We've got a 30% digital games tax offset so they're trying to obviously recognize that the government's recognizing that gaming is a big industry and what can we do to encourage more businesses in Australia to be investing in this area. So there's some offsets regarding that, which I think is cool. We've got, and then a lot of the other things are going to be quite high-end stuff that doesn't really affect a lot of people. So, and then the other aspect of the budget is obviously you've got government spending and government cuts to spending. So I won't talk too much about this, but if you're interested in a particular industry, so whether it's sporting, healthcare, all these kind of different things that have funding, that's the other thing the government covers on budget night. So they'll announce where funding is going to go and what they're going to do with it, where funding's being cut, which always riles up some people. So that's where you'll get a lot of controversial opinions on budget night, are quite often related to government spending and government cuts, more so than some of this other stuff. So yeah, that's the other area. So you can see quite a lot is covered in budget night, but this one's been quite a simple one when it comes to tax, is that rather than bring anything too major new in, they've really just extended a lot of the COVID stuff they brought in. I think the reasons for this, and I think we're going to see this for quite a while, is that a lot of money was spent in the last 12 months due to a lot of the measures due to COVID. So JobKeeper, the extension to JobSeeker. We've got things like JobMaker, Job Trainer, I think there's one. So the reason why all those things were brought in was obviously to keep the economy going, and they've done that with a lot of things. JobKeeper kept a lot of businesses going, but obviously now the government can't afford to keep spending. They're going to have to cut on some of these things. So obviously some of these measures have been phased out, but some of them are still going, and they've extended some of these things like we talked about with that tax offset, but they can't keep spending. Eventually things have to be cut, or they have to increase taxes. So they're always their options is, okay, do they cut spending or do they try and increase revenue? And normally, most of the way the government increases their own revenue is to increase taxes. So people don't like increased taxes. That's never good when it comes to them trying to get votes. So quite often it will be in cuts, or it'll be in taking things away and not really. So things like this tax offset, that sounds really good. And that's a good way for them to kind of, keep people happy, going, oh, look, we're doing another tax offset. You're going to get extra tax back, but maybe not really explaining that, okay, we were actually going to pull that away. And that was just a temporary measure. So extending it so it is positive, but maybe not as positive. So yeah, if you've got questions, make sure you leave them below. I'll answer a few of the ones I've had through the week. I can see we've got one in the comments. So if anyone's watching, I can see we've got quite a few people, more than what we've had the last couple of weeks, which is really cool. So thanks to everyone that's watching over on YouTube, on Facebook, and to the people that have checked out my podcast. So make sure you check that out because these episodes are going up on there. And I do just want to quickly go, before I go into the questions, if there's anyone that would love to talk about their financial journey, what I'm going to be doing over hopefully the next few weeks is doing a few interviews that I can put on YouTube and on my podcast of just people's journey on finances, how they handle their taxes themselves, how they've helped become more financially independent, how they might handle budgeting, and just kind of do a bit of a chat to you. So I'd really love if you can reach out to me on the socials, leave a comment, and I'll get in touch with you because I'd love to talk to some more people and I think share some stories with people. So I'll get into some of these questions that I got asked through the week. So what I'll do is I'll start with this one here. Should you sell a share that's been in a loss position for a long time? So I was actually able to reach out to this person, have a quick chat, and now I can share more of what I spoke to them about. So what they were saying is that, okay, they hold a share position. They bought it, say, 18 months ago. It's dropped significantly in price by about 50%. And what should they do with that? Should they sell it and cut their losses? Or should they just hold it until it comes back even, but they don't know how long that will be? Now, obviously, I can't tell them to go, I'm not a financial planner and can't go, yeah, you should go sell that, because obviously it's going to depend on everyone's situation. But I can talk to you about some of the things you need to consider and some of the mindset stuff. So if you're holding a position that's in a loss, a lot of people will not want to sell it purely because they don't want to recognize a loss. So they go, oh, no, I'll just keep holding it until it becomes in a profitable position. But what you've got to think about it is that every day you're holding your current portfolio of shares, and that can go a little bit with property, crypto, anything like that. And especially things that are low cost to get rid of. So I'll talk mainly about shares, and crypto is the same kind of stuff. So whatever you're holding in a position of shares or crypto, you're really choosing to buy that again at that price every day you hold it for. What I mean by that is, say you bought something for $100 and it's now gone up to $150. You're choosing to hold that position. So that means you're happy with its value at that price in a really simplistic way. So you're choosing that, okay, I still think that's a good price. Now, obviously, quite often when things go up, people go, oh, I'll keep holding because it might go up. And same when it drops, people might go, I want to sell, I don't want to lose more money. But the reason I'm saying that you're buying it again at that price is because that's its current price, and therefore that's what your portfolio is made up of. you could sell all that. Would you rebuy at the current price? So I think that's the question you should ask yourself, whether it's a position that's significantly dropped in value, like we're talking about here, or a position that's significantly gone up in value. Is it, would you rebuy at that current price? So if we look at this position that's dropped in 50%, you can go, okay, why, like, okay, it's gone down from $1 a share to 50 cents per share. Is that still a price that I would like to buy that share at? So if you've got extra funds, say if you looked at it and go, okay, that money's now sitting in cash, would I buy it again? No. Or, okay, I'd rather buy something else that I think has more growth potential in the short term, then I may switch to that. Now, if you're a person that wants to hold for a long time and you've bought a company that you really believe in, then you're probably not going to even be considering this, because you're going to go, well, I don't care. I want to hold this company for the next 20 years. But if you're someone that's looking at more shorter term, you might go, look, I only want to hold this for a couple of years kind of thing. You might go, okay, look, I've invested in this company, but say it's a company in the travel industry. And you go, look, you know what? Travel's not going to come back for a couple of years. I don't think this company can grow while it's not coming back. I think it might be a little bit undervalued, but I've found something else that I think may have dropped in price as well, but I think can really grow over the next 12 to 18 months. So I might go, okay, this is an industry that might have been affected by COVID, but I can see it's going to bounce back quicker than the travel industry, and therefore I want to sell my position in that and buy this. And obviously, you're going to have a little bit of brokerage fees. It's going to depend on how big your investment is to how much that's going to affect your overall potential there, but you might not want to move out of that. I think what's going to happen at the moment, a lot of people are considering, okay, I've got some shares that lost a lot of money. I want to move them out. I want to get into crypto because I can see that's in the news. Again, like I've spoken about in previous videos, crypto is obviously a risky investment. But people are going, okay, I think this alternate investment, you're really looking at investment A, investment B. Which one do I think is going to grow more over the next 12 months? And that's where your money should be. So now, obviously, there's tax implications. So if you've got a position that's significantly increased, you've got to then consider, okay, do I want to hold this for the capital gains tax discounts and things like that? So that's something else for you to consider. But when you're in a loss, you potentially got a capital loss there. So look, there's other things you want to consider, and it goes beyond that. But that's just a really simple way of looking at it, is, would I rebuy at the current price? If I would, then obviously you want to hold. And if you don't want to do it, then you want to consider selling. That's simplistic of it. So now I'll quickly jump back into this question. What is this $1,080 tax refund that keeps getting mentioned? I've spoke about it quite in depth earlier in this video. So if you want a more in-depth discussion on it, make sure you watch the replay. The replay will go up on YouTube, or it will be on Facebook, so you can watch that back. It's right at the start of the video. It's the first thing I talk about budget night. But as for those that have just joined us, as I said, this is going to be something that's going to be talked about quite a lot in the news. I've already seen plenty of headlines about it. So what it was, it's the low and middle income tax offset. It's been extended, so it's already currently going. It's been extended for 12 more months. What it's going to mean is that you're going to get those lower tax rates for the next 12 months. So you're not going to get an extra $1,000 back at tax time this year. Don't believe those headlines. People will do it to try and sell a headline, or you'll get accounts that will do it to try and suck you in. Go, oh, we'll get you an extra $1,000 back. Everyone's going to get it that's entitled to it, but it's likely have been factored in this year, and it will now be factored in again next year. It's a good thing, but maybe not quite as one-off good as what it's promoted as. So I've got a few questions coming through in the comments, which is really cool. Still got quite a few people on here, so keep asking them while I'm still on here. So I've got, does a sole trader only pay tax when they withdraw money / use business assets for personal use, aside from BAS's taxes such as GST? Quite an interesting one. So a sole trader will pay tax on their profit every year, unlike things like a company. So what's going to happen, a sole trader, for those that don't know, is one of the business structures you can have here in Australia. And what will happen is at the end of the year, their income less their expenses will come up with a profit, and that's what they'll be taxed on. So unfortunately, it doesn't give you much flexibility. If you make $1 million profit, you're going to pay tax in your own name on $1 million profit. You can't defer it. You can't distribute it to other people. That's what it is. So it's unlike, say, a company which will pay tax on its profits, but not you personally. So that's something you got to be aware of, and it's not an overly great tax structure. It's the most simple one. It's the cheapest one. It's the easiest to understand, but it doesn't give you a lot of flexibility. So you won't, it's not just when you withdraw. So people think, oh, well, I haven't withdrawn that money. It's still sitting in my business bank account. Therefore, I'm not going to pay tax on it. Unfortunately, with a sole trader, it doesn't work like that. Now, with a company, you won't pay tax personally until it's paid out to you as a wage or dividends. So that is where people get a little bit confused. But with a sole trader, if the money's sitting in your account, Doesn't matter if you've even spent it personally. You will pay tax on the profits, and that's as simple as what it is. So that's quite an interesting one. And then I've got another one here. Any tips into helping save money in a short amount of time? Well, my simplest tips on saving money is going to be earn more, spend less. That's the simplest of it. I've got a bit more detail on that. So things like budgeting is really important. So understanding what you've got coming in versus what you've got going out, that should give you a clear idea of, okay, how much can I save? So if you don't understand how much is going in versus how much is going out, how can you put a plan into what you're going to save? So that's the first thing, because then the second thing is having a plan. So once you've worked out, okay, how much can I save, make sure you put that into place. And that might give you a goal that you can aim for and you know is achievable. So if you can go, okay, look, in, out, I've got spending money, everything's allocated, and I've got an extra $100 a week. So you can go, okay, I've got $100 a week. What can I do with that? Over 12 months, that's going to be $5,200. So you know you can achieve that. And if you set that up on, again, you might then, okay, the third thing might be setting up an automated plan so that you know that that money is going into a savings account weekly and you know you're not touching it. And then a bit of an odd one that I think a lot of people don't think of, but something I think is important, is making sure you're allocating yourself an adequate amount of spending money. So when you're doing your budget, quite often what I think people do is they cut themselves short. They go, oh, okay, well, I'll be able to save $150 a week. That sounds great. And then they go, oh, but I've only got $50 a week left to spend for myself. Then they go, if something comes up, birthdays come up, and they haven't allocated for that, or they go out for dinner and friends want to catch up and all things happen. And next minute, oh, well, I can't save this week because I've overspent. And you've overspent by $50. And next minute, you're like, well, now I might as well overspend by $60 because, you know, what's the difference? And next minute, you've overspent by your $450 and you've saved nothing. So I think by allocating yourself an appropriate amount of spending money, something you know that you actually will spend every week because that's what makes you happy. You might go, okay, look, I like to go out for tea once a week and I like to buy myself one other thing a week. And look, I need $100 a week and I'll save $100. And I think that split is more achievable long-term. So, and I think when you start to achieve things, and if you continuously go, you know what, I'm only spending $80, then cut it back. Don't try and make too big a cuts up front, because that's where a lot of people get caught out. They run way too strict of a budget, and therefore they break the budget, and then the budget's broken, so therefore they don't care. They keep breaking it. They keep breaking it. It's all about mindset. If you can get that mindset right with, and I think saving money quickly in a short amount of time is all about the mindset of it, of one, setting those goals, two, making sure they're achievable goals, and three, then sticking to them. But I think if they are achievable and you know what that is, and put a reward at the end, know what you're saving for. I think if you have an idea of what you're saving for, definitely helps. If you're just saving for the sake of it, then things come up and you spend. So save for a holiday, save for a house deposit. You might be saving because you want to invest and you want to get passive income off dividends. You might go, you know what, my version of savings, I want to put $100 a week into the share market and $20 a week into crypto. And I want to do that week in, week out. And that's my goal because I want to generate passive income, or I want to generate a portfolio that reaches $1 million so I can cut back my work, retire early, and things like that. So by having those set goals, I think it's a lot better for you than just going, oh, well, I just want to save, and you save and then you get to $4,000 and you go, oh, well, I've got $4,000, but, you know, need a new Apple Watch. I'll go buy that because, you know, I'll just take that out of my savings. That's only $500. And then you go, okay, I'm back to 3.5, and you save a bit, and then you go, oh, you know what? I need some clothes. I'll just blow it this weekend. And you've got no goal, and therefore I think that quickly blows your savings. So I think, as I said, this question here is really good. Any tips on helping save money in a short amount of time? It's all about having a plan, sticking to that plan, but having an appropriate plan that makes sense for you and works for you and is customized to you, and adjust it as it goes. If income changes, if expenses change, adjust it on the fly. So I think that's where the other thing that people get caught in, their income goes up and they never touch their budget. They go, oh, well, I'll stick to the same budget. That'll be good. I'll have extra to save. And next minute they go, oh, well, I can spend that extra. And then you lose track in your own head. So put it on writing, put it on a spreadsheet, do something so you've got some kind of plan. So I'll give you a couple more minutes here. If anyone's got any questions, I'll talk about a bit of what else is going on the channel and what's coming up next. So I'm nearing 600 subscribers, which has been really cool. I've picked up a lot of momentum in the last month. So I really appreciate everyone. This has definitely been the most people I've had consistently on a live stream. So it's really cool. I really appreciate the support because it motivates me to keep doing it. I want to make more and more content. It makes me want to pump out more videos. So hopefully I'll have another video up on Sunday, another live next week. things like other things that are going on in my life. I've spent nearly all days on VFriends trying to track that. So I haven't actually purchased the VFriend yet. So for those that don't know what a VFriend is, go to my channel. I really wish you'd check it out. You'll probably watch it and go, what the hell is he on about? Like, I don't even know what he's talking about. But head over to my channel after this video is done. Go and watch my video on VFriends and see what it's all about. Hopefully by midnight tonight, Australian time or something like that, I will have purchased the VFriend. So I'll be talking about that more in another video. I know it doesn't interest a lot of people, but the world of NFTs is crazy. So head over to that. So that's something that's been going on. It's kept me pretty consumed today. So, and obviously as we're getting closer, so tax deadline is the 15th of May for a lot of people. I think that falls on a weekend, so it might end up being the 17th this year. But so yeah, our last few tax returns, I'm rushing for you for a new clients that have rang me this week. So look, I need to get it done. So trying to get those two things done. And I've got business tax planning that's going on. So picking up a few new business clients, which is really cool. So, and then dealing with a lot of people that are doing crypto taxes. So crypto taxes is a big topic right now. The crypto market has boomed over the last 12 months. People have made some significant money and are now going, oh no, I'm going to have to pay tax on this. And not even worried about paying the tax. So they've made the money, but just have no idea where to start. So see, we've got one more question here that's come in. So what would be your top 3 priority for a budget? So I'll approach this from 2 ways. So a bit of what I've talked about is my priorities would be having a budget to start with, making it realistic and tracking it or sticking to it. So that's my 3 priorities around mindset. Got those things right, and then your budget itself will handle itself. But some of the main things I think you need to consider in a budget is your biggest expenses are normally going to be housing. So work this out. What's your rent and what's your home repayments? Now, it's easier said than done, but don't overspend on these things and don't be scared to downgrade on things. If you're living in a house and it's just way too big for you, don't be scared to take on a smaller house next time your lease comes up. Or if you're considering buying, don't buy. What's the point of having 4 bedrooms if you're going to use 2 of them? Oh, yeah, I might use the spare bedroom once every 6 months when someone comes stays, and then I'm using the 4th bedroom just to pile up boxes. That's a lot of money you're paying for in rent. So whether it's extra rent that you're paying or whether it's in extra loan repayments, you're paying for that space. So that's probably my main thing is your housing is going to be important. Your motor vehicle expenses are always one of the second biggest things. So again, don't overspend on a car. If you've got car loan repayments, don't be afraid to sell that car and buy something cheap. Or if you're looking at a car, try and buy it in cash. That's going to be one of your other killers, and it kills a lot of young people. They take on big car loans and it kills them long term because it's expensive and they're stuck with it. So but then they can get rid of it, but they don't want to because it's all about the social. Oh, look at my car. I don't want to downgrade because what will people think? Don't care what people think. Sell it, buy something cheap, something that's affordable, that's not going to chew at your budget. And then my third thing on budgeting of the other thing is always food is going to be the other big expense you got. So it's housing, transport, and food. And with food, do a budget and do a meal plan. Do some kind of plan. Don't just go to the grocery store and just buy anything. You don't have to do this like really extensive thing, but literally just make a list. That's a starting point. And if you know you're bad with that, do click and collect or do online orders. A lot of the big grocery stores have that nowadays where you can do a click and collect order, and that's going to stop you from going around and just grabbing things off the shelf and taking them. And don't go shopping when you're hungry. That's a killer. And try and stick to your food plan and don't go then spend money too much going out. I know I can be bad for that, is that you go with a plan and then next minute you go, oh, I can't be bothered. So try and think of things that are going to stick to that, because if they're your big areas, like I said, but food is one of the biggest killers on budgets. So if you can kind of make sure you're cooking things that you know that are going to be easy for you to cook and not going to be time consuming, and therefore you're going to be able to do it, and it's not going to be like, oh, you get home from work and I can't be bothered. So make sure you've got those easy things. So something that we've actually done recently is bought some frozen foods, because we know there's going to be times where time gets away from you. You have a busy day and you go, oh, I don't have the time to cook. All right, I've got a frozen meal that I can heat up, or do some pre-cooking on the weekend when you get a chance. So there's some basic things to budget. So it comes down to, like I said, of having a plan, making your budget realistic, sticking to it, and then your 3 biggest expenses are going to be your housing, your car, and your food. So get those 3 things right in the mentality and the actual budget, and I think you'll be right. So again, I really thank everyone that's joined me through this. Make sure you check out some of the other videos on my channel and reach out to me if you've got questions for next week. I'll take them anytime. Instagram, Twitter, YouTube, leave them in there. join in the comments. I thank you all, and I'll see you again next week.